Hi everybody and welcome back to Wealth Wednesdays. My name is Janine Rogan and I am the CEO of the Wealth Building Academy. And this week we're going to be talking about the difference between common and preferred shares. When it comes to purchasing a share of a company, there are sometimes two options: common or preferred shares. Now, this isn't always the case. Most companies just have common shares available for purchase on the stock market. However, some companies do offer preferred shares. Common shares do get voting rights, and the difference between the two is typically around voting rights. So common shares get voting rights and preferred shares typically do not. There can also be different dividend rates for the different types of share classes. We typically see a higher dividend rate for preferred shares as they are typically seen as less risky, but we'll also see not as much growth in the actual value of the share on the stock market. The other big difference is that if the company were to go bankrupt, preferred shareholders would get access to any leftover assets before common shareholders. Now, this is something that is not very likely, especially if you're investing in companies on the S&P 500, but is something to consider if you're later in your investing journey or you just want something a little bit safer within your portfolio. As I mentioned, it is not always possible to get preferred shares, but they do, in some situations, hold a place in your portfolio for more of a fixed income approach. Remember, you should be having equity in your portfolio as 125 minus your age. So if you are 30, 125 minus 30 is going to be 95% in equities and only 5% in fixed income, and preferred shares would typically fall under that category. If you have any questions about preferred or common shares, you can leave them in the comment section below. And if you enjoyed this video, please give it a thumbs up and subscribe to my channel, and I will see you next week.